If you work in Germany or are looking for work here, you might want to know where the job market stands and where it's going, which depends, of course, on the shape of the economy. And you probably know that hasn't been so good lately. Well, Germany's top panel of economists has now weighed in with its newest outlook on the economy. The short version is that things aren't great and they're not going to get a whole lot better soon. To put it in numbers, 0.5 percentage point of growth this year and slightly better next. Then there are comments like these peppered throughout the report. The German economy remains in a period of weakness, high energy prices weigh on the recovery, and a rapid recovery in labor demand not yet in sight. There's of course nuance in all of this, so I'd like to break this down a bit further. I'll talk about where the German economy, especially its job market, is at this moment, about which sectors are up and which are down, and I'll look at where the experts think things are heading. And if you stick around, we'll look a bit at the bigger picture, that is, the major forces driving the direction of Europe's largest economy well into the future. First, let's talk about the new prognosis. This is the most recent and best assessment of Germany's essentially most esteemed economists. That's a government-convened working group known as the German Council of Economic Experts, which rigorously sorts through economic indicators and publishes, twice a year, an assessment of where things are and where things seem to be going. Well, the newest report confirms that right now the German economy is essentially facing two crises. One is the bigger identity crisis in a way, which Germany is facing alone. The other is more acute, and that's from the war in Iran, and it's hitting everyone. Now, both of these crises are having an effect on the German job market. First, unemployment has been rising steadily for a while. Nothing crazy, but a clear climb if you look at this graphic. If we want to see where these losses are coming from, we have to look more closely at some of the latest numbers. Now, these are from February from the German Federal Employment Agency. When we look at losses, it's manufacturing that clearly sticks out. That's a category that includes metals, machinery, and car makers. You're probably aware the car industry hasn't been doing so well, but those other sectors, machinery and metals, are also important, and they're also struggling. There are a number of reasons for the downturn, which we've covered in other videos. We aren't seeing massive layoffs in the German economy, and that's an important point. Many of the biggest numbers you may read about in the newspaper when it comes to job cuts are actually due to take place over the coming years, which really means a lot of buyouts, and especially aging out of positions. So these are more positions that are going away and then not being refilled. So where do we see gains in the job market? Well, in services, the public sector, but mostly healthcare and the care sector, which is nursing essentially. And in one way that's not so different from another major economy, the US, where most of its recent job gains have actually been in the healthcare sector. Well, both countries have aging populations, so that makes sense. Now, the loss of manufacturing is a big problem for Germany. It's the identity crisis I mentioned before, and it's more than that really. It's a structural crisis. That is, something fundamental isn't working. And in this case, that's manufacturing, the traditional strength of the German export economy. It's a massive job provider, close to 800,000 employees in the car industry alone. And it's better paid than the average job. While manufacturing has disappeared more rapidly in other Western countries in recent decades, it's managed to hold on in Germany more or less. That's now fundamentally changing, and there are a lot of downstream effects of this. Wide-scale joblessness may not be one of them, but the setback in public budgets is becoming increasingly visible. Cities and governments across Germany are heavily dependent on taxes from big firms. Now they're posting major deficits, and they're cutting deep as a result. That's made hard times more visible across the country, because it tends to pull money for things like the arts and public media, areas that traditionally rely on subsidies. Some cities have even said they're freezing hiring. So there's been a general downturn. And as part of this, hiring was already lukewarm across the country. While this graphic is from the new prognosis, we can see that beginning really in 2023, vacancies, or open positions, began to shrink, especially in smaller operations. But look here, and it appears things are actually taking a slightly more positive turn. And there was reason for optimism in late 2025 going into 2026. Business sentiment actually picked up in one of the most important surveys in the nation. Then came the war in Iran. Rising prices are hitting consumers. You have less to spend when you have to spend more for gasoline or groceries, and it hits certain sectors hard up front, like travel. Lufthansa, for example, is freezing hiring. If rising prices or inflation spread to other sectors, it won't be alone for long. Now, central banks will need to raise the cost of borrowing money to fight inflation, which also hurts companies even more. There are already signs this is starting to happen. Here's what a board member of the European Central Bank, Isabel Schnabel, just told Reuters. Borrowing rates likely need to go up in June, whatever happens in Iran. To sum it up, the job situation in Germany isn't dire, but it wasn't great to begin with, and actually it's getting worse. In fact, here's how Germany's Federal Employment Agency recently put it in its April report. It said the risk of losing employment is still relatively low in Germany compared to historic averages. However, the chances of ending a period of unemployment by getting a new job is at a historic low. And that was as the Iran conflict was just starting to really bite in. So that's where we are. But can we really say where things are headed? Well, the first problem is that we still don't know where Iran is going. On the one hand, we've moved away from the worst case scenarios we talked about in March when the war broke out, $150 to $200 a barrel of oil. Right now, oil is around $100 a barrel, sometimes lower or higher depending on talks between Iran and the US. The worst case scenario imagined by the new prognosis is $120 a barrel that subsides later to $100. But remember, even if the situation in Iran gets better, there's evidence the damage has already been done. The new prognosis assumes that higher interest rates are likely, which is part of the reason for the low growth assessment going ahead. Remember, 0.5 percentage point this year, a little more next year. The primary driver of growth, meanwhile, increased government spending in Germany. In short, don't expect much improvement from the labor market. The long-term trends are meanwhile likely to continue, more or less. Hiring is likely to be tepid at best. If you're looking for a job in healthcare or services, you're likely to do all right on average, whereas if you're looking for one in industry, it could be more difficult on average. If you look at the spring prognosis, it's pretty thick, and this is just the first chapter. While we've talked mostly about the current economy in the next year, so much of this report actually focuses on the real long-term factors facing the German economy and their consequences. The shrinking of key industries like cars and machinery is not a small thing. What happens when well-paying industries fall away while the ones seeing growth are lower paying by comparison? What does it mean when the most in-demand sectors are reliant on foreign workers? And can the nation attract them in large enough numbers? And what does it mean when those two dynamics, the loss of traditional industry on the one hand, and the growth of the care and medical sector in particular, seem to fall along the lines of nationality, essentially? Check out this fascinating chart in the spring prognosis. The growth in jobs in Germany in recent years has been largely due to foreign workers when you look across all job gains. Now, German nationals are even starting to see more losses than they are gains. What does that mean socially and culturally for a country where migration remains a controversial topic and populism is on the rise? Well, what's shaping the economy of the future is another aspect of German demographics, really. It's old and getting older, and fertility rates are low. If you look at a population pyramid like this one from the German Federal Statistics Office, you can see it right away. A ballooning of the age cohorts up top, while the bottom becomes narrower. And that raises big questions about the social insurance system, which depends on younger generations supporting older ones. With fewer workers to pay those fees, those taxes or contributions essentially, and more pensioners requiring support, the per-person contribution balloons. Germany's aging society also raises broader questions about tax receipts, state coffers, and again about immigration. Those are issues, however, that are better left to a different video or videos, some of which we've already produced. And they're ones that, regardless of what happens in the coming months with Iran or tariffs, are really going to continue defining and shaping the German economy and its job market in the years ahead.